The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Posted the chart of the FTSE in there. There's actually two of them, and the reason why I put the second one in is our friends over in the UK that send these to me missed that big ABCD that was there also. So there's a possibility that that's a pretty big high in the FTSE. Now, I'm not saying it's the high, but I mean, I'm saying that it is high. So let's just keep that in mind, that these things occur this way. Our guest today will be Stan Harley at the half hour. And we'll take a look now at the German DAX like we always do. Mr. Hugard's one of his favorite trading vehicles, please. Okay, there you'll see here that we still are heading down, it looks like, also in the DAX on the short term, so I think that's relatively important. Folks, I posted something in the TFNN room this morning from one of our listeners who's been actually working very closely with me and showing me some of the things he's doing. In the past few months, he's been able to turn it around, and I think that's really, really happy. It's one of the reasons why I do the teaching stuff, folks. I'll tell you, it was the big break for me, happened way back in 1986. I was giving a speech for the Security Pacific Bank people. I think it was, Security Pacific Bank people in Los Angeles. They had like 20 traders there from all over California. My daughter, who was at UCLA, was working as my secretary there to bring in the people, register them and all that stuff. So she sat there for 2 days. And when we were driving home on Sunday night, when we were all finished, she said, "Dad," she said, they were very entertained and everything. She says, "But of those 20 people, Dad," she says, "only about 2 people really knew what they were doing." I said, "Come on." And she said, "True, Dad." She said, "I could tell by their faces and the little notes they were passing back and forth. You were missing the boat, that you just weren't getting across to them." And since that time, I still give the big speeches, of course, because, I get paid a little bit for it. Plus, it brings people into pattern recognition. But the only way to really do this is one-on-one, because everybody is a little bit different. And that's one of the reasons why you got to be a trader, is because it's a lonely business if you're a trader. And if you like being alone, this is a great business. It's great freedom and all that stuff. But the key to that is you've got to be able to learn to do it yourself. And that's what I try to do on these live trading sessions. I do a little bit here, but, not very much, actually to do it. But some of the things I got, that was just a nice thing that was sent today by one of our friends. But one of the most memorable ones was about 8-9 years ago. My daughter Jill has a very nice, very thriving practice in clinical psychology in San Luis Obispo, and her and my grandson were out to have dinner and at one of the restaurants there, and they came in and they gave their name for the reservations, and the guy walked up that was waiting to get to seat at table 2. He said, "Excuse me," she said, "are you any relation to Larry Pesavento?" And she said, "Yes, he's my dad." And she said, "Well, when you see your dad, tell him that he changed my life." He said, "I started trading about 10 years ago, and it's been the best thing that's ever happened to me. And please give him my regards and hope that I was well," and all that stuff, which was really nice. And he picked up the check for the family, which was really, really nice. So little things like that, really mean a lot to me. All right, let's take a look at what we were looking at yesterday, folks. One of the things that we were watching very closely, I said if you did this trade, you had a chance to pay for the thing. And this is what we're going to try to do, is to make money so you don't have to pay for this darn thing tomorrow. Beautiful ABCD, 3 drive to a bottom pattern, right exactly at the 61% retracement. Did exactly what it was supposed to do. And then look again what happened last night. You'll see here that it went right up to our first target area of the 382 of the high from back on December the 4th, and it backed off to the, I haven't checked it this morning to see what it's doing, but that's the type of thing that we're doing. But the really, really super good trades, the really super good trades were the ones that occurred a little bit later. We had two beautiful, I mean, you talk about ABCD patterns, folks. Just take a look here. This is crude oil, which is one of the best things that here, that what you've got here, you got the beautiful ABCD down at the bottom at 45.40. You got the beautiful Gartley pattern up at the top at 46.50. There's nothing wrong. I mean, that's just a beautiful pattern. And if you push it out a little bit farther, and just to take a look at what's been happening this morning, look what's been happening this morning. Nothing more than ABCD there also. So that's the whole thing. Is what that whole floor traders handbook that I brought out this year that was helped me with John Jameson doing it. He does the word stuff on the stuff, but it's 90 minutes of proving to you why the darn thing works, and that's over 10,000 trades. So it's just a simple ABCD. That's all the markets do. Let me give you an example. Yesterday, I posted this just as it was happening in the middle of it, right near the opening price. Let me see here, near the opening. I think we were expecting this anyway. There was the ABCD pattern in the NASDAQ that we were looking at. Nothing more, nothing less. That's all it was doing. But if you took just a little bit of time and looked at it really, really closely, look what you're watching here when you're doing this. Just give me a second to post this into the room. You'll notice that the high that it had on Sunday night, you notice the number of bars up in the move. There are 27 bars. Then it makes its low in the morning at 4 o'clock in the morning. And here, right near the opening time, 10:30, right after we were getting off the show, right there at the 1.41 expansion, there's the ABCD pattern. Same number of bars up, 27 bars within 1 bar of a 15-minute chart. And then what did it do? It dropped 100, almost 60 handles all the way down. Actually, it went lower than that in the pre-market, so it dropped about 80 handles from that level. So those are the things. You're right, Gator. You bet. I would be happy to pick up your check anytime. Okay, let's just remember that that's just a few of the things that we're watching. Now let's take a quick look here. I've got a short session today because of you guys are blessed because you get to hear Stan Harley today. But I wanted to go over a couple quick things. One of the questions that someone's asked is, how do you know when the market extends past the 1.618 level? Now you'll notice here, this is a really nice picture of what the Gartley pattern looks like. You can see that at point D. The reason why it's a Gartley is because you have the BC swing to look at, which is either 127 or 1618. You got the X to A, which is either 618 or 786. And then you got the target up there with the maximum being 1.618. And he asked, how often does the market go beyond 1.618? And the answer to that, boys and girls, is I don't know the exact number, but it's a lot. And the reason why is these markets that are trending really strong, like we've seen in the S&P, look how many times it must have expanded between October and where we are right now, or March since where we are right now. So those 1.618 expansions go quite a bit. You know what I mean? That's the whole key to keeping an eye on this stuff. So I hope that helps, because remember, 1.618 from my perspective is the last. You're at the edge of the cliff. And you go beyond that, you better take your rosary beads. 877-927-6648. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we've been asked to reevaluate that diagram that was sent to us by Jeff. You'll notice here that this ABCD pattern that is there, there's many patterns within it. In other words, the X also becomes an A. The A becomes, the B, C, D, and then the E is the D pattern of that whole thing. But the gentleman said he's a huge profit in something, and he's wanting to know where to take profits. The answer to that is very simple. Always take your profits on the high if you're long, and take your profits at the lows when you're short. I wish I knew the answer to the question, actually. But once you're past 1.618, to me, it's really, really simple. If you want to use a trailing stop, put your trailing stop at that 1.618, because if you come back below it, that's telling you that the market has stopped its run. So that's it. But you're never going to get the total move, folks. The number of times that I've got the exact low and the exact high on big positions, I don't know. I've told you many times during the time at Drexel, by golly, I got out long before the high. I got out in January I was out on January the 16th, I believe. It topped on the 20th of 1980, and it went $200 higher. I got out at around the 660 level for a lot of different reasons, as you imagine. But remember, I'm long that stuff from $1.74 to $2.50 an ounce. $250 an ounce, so I was getting out at 3 and 4 times that, and so it was one heck of a run. But you just don't worry about it. I mean, just when you get out, shake it off. Look at me. I got out of the short gold position down there at 1767, partially and greatly responsible for that was Mr. Z and also the full moon. But it's rallied $110, and guess where I've been? I've been waving a flag, and I missed that darn thing. Let's talk just a little bit about the stock market. There's something going on in the internet that people are talking about, the wedge pattern that is happening in the S&P on the weekly charts. And if you take a look at this going back since 2018, you see this is a wedge pattern that it's looking. But folks, there's two problems with this from my perspective. One, it's a weekly chart. You can see the patterns. They line up beautiful. You're setting right at a 1.27, pretty much like you're supposed to do. You see the beautiful ABCD in the middle. You see that also. The problem is if you're doing this on a weekly chart, do you know how much you have to risk to see if if you're just liquidating your portfolio and everything, then that's okay. But if you're trying to pick a top, boy, that's really difficult. And, you don't really need to do that. Just wait for the secondary pattern. And that's what I try to do. I don't always do it, but, you're waiting for that. And so that's the main thing to look at. Look at the S&P now. If you look at it on a daily chart, look how clear it is to say, this might be it. Somewhere between 366 and 378 might be it, but it hasn't turned yet. So when it does turn, I hope to be there. Maybe I will, maybe I won't, but I'm certainly going to watch it very, very closely. You do miss some. Let me show you one of the ones that really frustrated the heck out of me yesterday, Sunday night, that I didn't see this until well after it happened. That is that we made a perfect 382 retracement on the silver right down there at that 2365 level. It rallied more than $1 an ounce. And the problem was I was watching the same thing in the gold market, and I saw the small ABCD that was there. The problem was it missed the 382 retracement by $10 an ounce. And from my perspective, that's too much because that's $1,000 for trading purposes. And for that reason, I have to stand aside and, wait and see, what the next one is going to be. So those are just a few of the things that you have to. That fact is for tomorrow between, between 9 and 2 o'clock, we've got 5 hours there that you'll be able to ask these questions. And we're going to walk through some of these. We'll have the same questions posed to us tomorrow that we're looking at from yesterday, because not all the trades will be right, but we will be profitable at the end of the day. I feel pretty comfortable with that. Yesterday was a really good day, and today started out okay. But we'll see if that, in fact, is going to be the case. I had a real interesting situation here in the E-mini yesterday. If you'll remember, we were talking about, being short that thing up around the 36.93 level. The high was 36.96, and it broke down quite a bit, and we still happen to be in that one. So we're going to see if it – I haven't checked it in the last few minutes to see what it's been doing, but it should have a little bias to the downside here this morning. Let's see if we're doing it the right way here today. Still trading down. We've had a low as a 64 earlier, and then we've had a little bit of a rally here, but we're still in this one, and we put our stop at 36.93 to lock in. 36.83. To lock in $500 if we're doing that. As far as the one for the for the natural gas, we're down in an area where it should be bottoming again here. You made your first objective up here. Let's just bring this up to see where we are here, because as you can see what I would be watching today if we were doing this live. And you'll see here, just 1 second, boys and girls, we'll get this right up here. There we are. You'll see it's going to have a lot of support between 42 and 40, but I would prefer to be a buyer right in here at around 243, and then I would see whether this market has got a chance to have a pretty good rally with that level. You wouldn't have to risk very much at that point. By the way, we lost an incredible hero for the United States, folks. Chuck Yeager passed away, the test pilot for the SR-71 Blackbird, which is equivalent to the stealth bomber on the small version. But man, what a guy he was! Go Google him, folks, to see how many different. He's a brigadier general in the Air Force, and look at the medals that he had. He had 2 silver stars. I mean, it's a really tough one to get. Bronze stars, Purple Hearts, everything. And he happened to be the uncle a cousin of Steve Yeager, who was a catcher for the Dodgers. And guess what? That was the years when I was at Drexel and Tommy John was the catcher or the pitcher, and Steve Yeager was his favorite catcher. And so when we would go into the clubhouse to see Tommy before the game, we really got to know Steve. And he lived in Calabasas, which was right next door to Westlake Village, and so we knew him from that level too. But anyway, he was a really nice guy, and he still works for the Dodgers as a catching coach, as I recall. But a super nice person, and just like his cousin Chuck Yeager. But what a hero he was. He was in the same era of John Glenn, so it was really something. Okay, let's move on here. We're going to have Stan Harley as our guest here at the break. Again, we'll be able to, tomorrow I will be doing the show live. I won't be back again until Thursday. Thursday, we have another one of our good old boys from Tucson, Arizona. Arch Crawford will be our guest. And then Friday, we have Norman, calls it like it is to the minute. Winsky will be our guest on Friday. So that's what we're looking at here this morning, and we'll keep a close eye on some of these things as we're watching. We'll be watching for a major correction here in gold, folks. I think we should get we're up $110 from the bottom, so we should back off about $40 or $50. So far, our biggest correction has only been $27, so we should do about twice that, down to about $54, somewhere in that ballpark. And we'll be watching to try to get in the gold market with a nice little ABCD pattern. So let's stay tuned for Stan Harley, 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed
designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We have Stan Harley of the Harley Stock Market Letter on the line today. Stan, how are you doing?
Good morning, Larry. Doing just awesome.
Good. Listen, you've posted a chart here that looks very interesting. You want to tell the folks what we're looking at here this morning?
Absolutely. Larry, I think the market has broken out of a sideways trading range that spanned a number of months. Most importantly, a week ago, the New York Composite Index, the NYA, broke out above its January 17th high of earlier this year. And while a lot of the focus, of course, is on the Dow Industrials and the S&P and the NAS, really the most important index of all is the NYA, the New York Composite, because that reflects all of the stocks on the New York Stock Exchange. And Larry, that index finally broke out to a new high. So all of the things that I look at from a technical perspective say the bull market is live and well. We're heading higher. And, what is there not to like about this bull market? But no market goes up forever. And we tend to get short-term stalls out in the advance, and I think that's probably what's developing right now. I think we probably hit a short-term high, and we're probably going to, even though I think we're going to be higher in the weeks and months ahead in the near term, I think we're probably going to stall out here. This is a chart of the S&P 500 on the screen right now. And I do a lot of work with not only Fibonacci numbers, but Lucas numbers. And if you look towards the left of the chart there, I've put a vertical line at the February 19th high of the S&P 500, which was at the time the all-time high, and counted forward 199 trading days. That's a Lucas number. And the high a couple of days ago actually occurred on the 202nd day from that February high. So for all practical purposes, that's 199. And then I found that all of the important highs and lows tend to be important either Lucas numbers or certainly Fibonacci relationships from the high-to-high count. So, for example, the high we saw back on June the 8th of this year occurred 76 trading days from the February 19th high, and 76 is also a Lucas number, and it also equates to 0.382 of that range. So some very interesting Lucas numbers and Fibonacci relationships have all lined up here. And I think we've probably seen a short-term high, and I think we're going to consolidate for about a week into about mid-month. And then once we work off the overbought condition, I think the stage will be set for a continuation of the uptrend.
Wow, that's really good. I have a couple of questions from our listeners, Stan, if you don't mind. Do you take a look at the Wilshire 5000 or the Value Line Index at all?
Good question. I do, but I don't do a lot of analysis on them. I think those two indices, the patterns are very closely aligned with the New York Composite Index. And one can get a very similar feeling of how the market's performing by looking at the New York comp, the NYA.
Mm-hmm. Well, the NYA is by far the broadest and most comprehensive of what the stock market's really doing, as I understand it. Is that correct?
Absolutely, yes. I mean, in our business, most everybody focuses on the S&P 500. Mm-hmm. In the old days, the focus was on the Dow Jones Industrials, and the Dow is certainly a very important component. And I look at both. I look at what I call the Big Five, Larry. For me, the Big Five are the Dow Jones Industrials, the S&P 500, the NASDAQ Composite, the Dow Jones Transports, and the New York Composite Index. And I look at those Big Five components for either confirmation or divergences. in a sustained uptrend, in a healthy uptrend, we want to see all 5 of those making new all-time highs, which has happened here of late. Or in a healthy downtrend, you want to see all 5 of those going down, like we saw in the February-March time period. But what happens is when you start nearing certainly important highs, you'll start seeing one or more of those components among the big 5 start falling off the all-time high list. And that's suggestive of the market rally running out of juice and poised to make some type of intermediate correction. We're not seeing that now. So although I am suggesting the possibility of a short-term high here, it's not an intermediate high. I think it's just going to be what I call a trading cycle high. We tend to get these about every 30 to 40 trading days on average. And I think that's what's probably developing right in here. But I think the long-term bull market, despite all the bad news about COVID and everything related to it, I still think this market's going higher, Larry.
Well, you have to admit it has climbed a wall of worry that it's never done before. I mean, it's done some worrying before with the Iraq and Iran wars, back in the 70s and stuff. But the news now is so bearish every day that, the market continues to go higher. And if you're trying to fight the tape, boy, you're in big trouble because it just wants to go higher. And like you say, the prices are not. I think W.D. Gann says, "Don't be afraid of higher prices. They're there for a reason." And this certainly could be, one of those times when this thing is finally over. Maybe everybody will go out and travel for a month. I don't know, but it's certainly scary, the news that comes out these days. That's it's just really amazing. And the second question that we have, in fact, we got one other one after this. The next question is, what would be your upside target here? Because you turned bullish a month or so ago, and so what is your upside target that you're looking at in the S&P 500, Stan?
I'm looking at a pretty serious advance that's going to last for some time, and my longer term target is essentially equivalent to what we saw at the 1929 high. 1929, the Dow reached 386, and I look at the market relative to base 10 benchmarks. So a simple proportion, 386 is to 100, as X is to 10,000. What that tells me is 38,600 on the Dow Industrials for an ultimate peak, plus or minus. Maybe a couple.
That's a good 10,000.
Not tomorrow, not next week, not next month, but.
Oh, wait a minute. You can't tell us the exact time of the high?
We'll do that in the next interview, Larry.
Okay.
But no, a serious answer to his question. I think getting up at a commensurate level relative to the base power of 10 is a very plausible expectation. And the Dow reached 386 and then plummeted down to 40 from 29 to 32. And I'm looking for something essentially similar. Will it be the same to the decimal point? Well, no. But I think 38,600-ish at the ultimate high, I think, is a very plausible, very reasonable, very quantifiable number.
Boy, that's a big number, but by golly, if we can go from where we were back in July of 1932 when we were trading at, I think, 42 in the Dow Jones to where we are now, that's a bull market, that's for sure.
If you add 89 Fibonacci years to that low, what do you get?
80. Well, that low, 89, would take you to 2021, right?
Yes.
Wow. That's coming up pretty close. Stan, hey, listen, thanks for joining us, my friend, and we really appreciate you being on. And be safe and have a wonderful holiday. We'll have you on after the first of the year, okay, my friend?
Look forward to it. Thank you.
You bet. Stan Harley of the Harley Stock Market Letter, folks. We'll be right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has just launched our Tiger Dollar Holiday Sale. For a limited time, we've doubled all the Tiger Dollar bonuses, where you can now get up to a 20, 30, or even a 40% bonus on your Tiger Dollar purchase. Tiger Dollars are good for all TFNN newsletters, webinars, and services and never expire. Whether you're a current subscriber or just thinking of signing up for any TFNN products in the future, this is a great time to get your Tiger Dollars. Happy holidays from all of us at TFNN.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, let's take a quick look here at the NASDAQ, like we were doing before the markets were opening here. If you'll remember here in the NASDAQ, you notice here that we were watching that 78% retracement up there at the 12,600, which was the price level of the larger ABCD pattern. That's what was happening. And since this morning, you know, this thing is quite active. And so if we look to see what's going on with it right now, you'll be able to see here 1 second as I bring this up. This is where you put your stops beyond that 0.786 level. You'll see we made a 78% level this morning. We came down really hard, and then since that time we've had a very strong rally, and then we've given it all back up. And so what we're trying to do is to find these spots where you're looking at certain patterns when you're watching these intraday. Remember, these things are swinging, you know, like pork bellies used to. Look at this. The 78% level today, early morning, was right there at 12,580. We're now 40 handles under that. At 12,544. That sets up a perfect ABCD pattern there at 12,500. Now below 12,512, you know, sets up another move to the downside. But look at the trend here since Sunday night. You made a perfect 78% retracement Monday morning at 4 o'clock. You make the ABCD pattern right after the opening yesterday at 12,600. And we talked about that number several times yesterday, folks, as being important, and that's what we're watching. So what I'm watching now is to see how the market gets down to this 12,500 level. That equivalent in the S&P would be down around 3660, as I recall. Now, so this is how I set this up during the day. That leads me back to the other question that someone asked about is, about this wedge pattern that is possible, in the S&P 500, very similar to what Stan was talking about with his counts that he's looking at and everything, but look at this. I mean, this is a beautiful pattern here in the S&P. You can see the 1.27 expansion and everything, but folks, that's beyond my pay grade. I do. You remember the movie City Slickers with Jack Palance, who used to come into the Drexel office and do one-handed push-ups in his suit? Ex-Marine, what a super guy he was. Anyway, if you'll take a look at that, it's a great pattern. But if you try to sell it up in here, you have to risk a lot of money. Yeah, that's right. That was the thing. Do one thing right. And at the end of the movie, he tells Billy Crystal, "What do you mean one thing? One thing?" He says, "Just do one thing right." And he said, "The other stuff will fall into place." And that's what you got to do in trading. And the one thing that you have to do in trading before you do anything, you've got to think differently. You got to think like the slot machine. On the slot machine, nowhere in that slot machine does it say you have no chance of ever beating me. Nowhere in that slot machine does it say I've taken in $1.2 million more than I've given out. What it does say, it's got all these red, white, and blue flashing lights and say, well, if you get it right, you're going to win $25,000. Yeah, there's going to be somebody that wins it, but the odds are it's not going to be you. So what you have to do is focus like that slot machine does and figure out how to take the money in and not give it out, because that's where the real secret to the wins are, is keeping track on what you're doing as far as your risk control, because trading is a lot like sports, folks, and sports is based on defense. And going back to the Steve Yeager, who was a catcher for the Dodger, the great pitching will be great hitting, and that is absolute fact in baseball, and those guys know that, because that's why they get somebody like Koufax and Drysdale and Whitey Ford and Robin Roberts, some of the Warren Spahn, and those guys, they were I'm forgetting Randy Johnson and all the earlier ones, but later ones. But it's all about great pitching will beat great hitting, and that's what you have to do in trading, is to be defensive, because you're going to have losses, folks. Losses are like breathing, and sometimes they come in droves and in swarms. But when that swarm is over, that's what you've got to be ready for. So that's a key thing to remind yourself of what you're doing. Now, I wanted to bring a nice pattern up here over the past month or two here in the Apple. Let's get this up here so we can take a quick look at it here. You'll get up here. Right, Peak is talking about what makes timing so difficult. It really is. But one of the things I'm going to be focusing on tomorrow is I'm going to show you how that the AI program that I use, it's all done by computers, but you can do it by hand. There's a simple little formula that was shown to me by Dennis Reagan. Jim Twentyman is going to be on tomorrow, hopefully we're going to have Tommy Terrific on, Trader Tom. But that's up in the air. But I'm pretty sure Twentyman's going to be on and talk to us about harmonic numbers, and when we were using this MIPS computer, which basically means millions of integers per second, and how we try to find out where these patterns were going and what these ratios meant and stuff. And that was a big thing. But if you look at this chart of Apple going over the past month, you see the ratios that we see there. 618 low on December the 24th, right at the Thanksgiving, which is the most bullish time. It goes from 113 up to 124. Now it's making a little 3 drive to a top pattern up in here. So at a 1.27 expansion. So that's all you're trying to do, is to find these, looking at it. That's why I don't concern myself with looking at a weekly chart on the wedge. I know it makes great talking points for the internet, but frankly, that's far, far beyond this old cowboy's pay grade. I'm here to make $1 and spend $1. That's what I like to do, and I can't guarantee it. TFNN won't allow me to guarantee that we're going to be profitable tomorrow, but I'm going to do my best to make sure that we're profitable tomorrow, and then you'll get your money back plus some. I know the plus some is going to be there, but getting the money back, I can't make the decision that it's 100%, but we've been pretty lucky on the first two, and you're able to do this if you do it simply. First of all, we know if we're going to be there for 5 hours, we're going to have some very nice ABCD patterns. The problem is the ABCDs only work about 65% 100% of the time. And that's really what we're going to be looking here. Peak is saying makes sense to be short here, but no one take that trade until we are down 1,500 points. Well, that probably is true, Pete, but between now and 1,500 points, there's going to be some great swings in here. And the market will telegraph what it wants to do. I mean, this much I'm 100% sure of, because we've seen this just this week here, some of the things we were looking at, the gold market, the British pound market. You know, these are markets that have been telling us what they wanted to do for, a couple of weeks ago. So that's really what you want to be trying to do, is to focus on what are the good patterns that'll get you in something where your risk-reward ratio is better than 3-to-1, and your profitability factor, in other words, the number of times you win versus the number of times you lose, is going to be better than 7 out of 10. Hey, listen, there's no baseball player that bats 700. There's no golfer that wins 70% of the matches. And there's very few traders that make 70%. So we got to get somewhere between, and you can make a good living at this at 50% winners, because your winners are going to be more than your losers are. And that's the key to what we're doing. I wish Mark was here, because he would be, patting me on the shoulder, and he says, "Wow, you did learn something after all these years." But I had a big advantage here, because from 1996 through 2001, I had Mark Douglas here in our office here in Tucson every single day, and of course we became the best of friends at that time. And but he drove into me, and when these great traders would come to visit us, and there were some real serious people that came here to his office, you wouldn't believe how they talked about certain things. And one of the most amazing to me was the fact that leaving money on the table, they didn't like that. They didn't mind losing. They didn't like leaving money on the table, which is silly, because you're not going to get the high tick or the low tick. All right, let's take a little break. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that will take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The opening call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the opening call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we will be back on Thursday because tomorrow is our full day thing, so we don't do the show then. We'll have Thursday, we'll have Arch Crawford as our guest. Friday, we'll have Norm Winsky, who always has, well, they both do. They both have some great stuff to look at, but Norm has been very, very proficient at telling us where these markets are going, so it's always nice to hear Norm coming on. So let's keep that in mind. One other thing, another question popped up about that diagram that was posted by Jeff, and they asked me to reiterate what I was saying earlier. If you're looking at this is a perfect Gartley pattern at point D. Gartley said on page 222 of his book, Profits in the Stock Market, written in 1937, and it cost $500 for that book, $1,500 for the book, which was the cost of 3 Ford automobiles. When you see an ABCD pattern in a bull market, you buy it. When you see an ABCD pattern in the bear market, you sell it, and that's what we're waiting for, folks. We're waiting for that pattern. Now, you can try to come in there and pick a top if you like, and that's okay because that's part of what trading is all about. But remember, when you do that, you have to put a stop in to tell yourself where it's wrong, because these patterns extend past 1.618 many times, because when the market's thrusting, that's what it's doing all the time. So remind yourself that it's very, very important to take a look at that. Regarding the bond market, I still think we're quite bearish in bonds, but we've had a little bit of a rally coming on in here now. It should be topped somewhere at around that 173.16 to 173.20 level, but that's a little bit later. So we'll hope to see you folks tomorrow for the live session. It's going to be a lot of fun, and I hope it's going to be profitable. I know hope is a bad word to look at, but you can't be saying 100%, but you got a pretty good chance if you're looking at odds and you're watching ABCD patterns for 5 hours, you're probably going to have some really nice ones in there. So I thank you for joining us and supporting TFNN, and we'll see you folks on Thursday where we have Arch Crawford. Friday again will be Norm Winsky. So live every day in an attitude of gratitude, and may God bless.